Good morning, everyone. Thank you very much for joining us today. I'm Thomas Hale. I'm the Shanghai correspondent at the Financial Times, and I'm here today to be discussing, along with my panelists, the topic of sustainability and how it overlaps with thematic investing. So to discuss this, I'm joined by James Chu, who's Chief Investment Officer for Southeast Asia at HSBC Private Banking and Wealth Management. Welcome, James. Morgan Daldon, who's joined from London. So real time zone sacrifice there, Morgan. Thanks for that. Who's Director of Research at Global X ETFs. And Adeline Tan, who is a leader in the wealth business based here in Hong Kong at Mercer. So thank you all very much for joining us today. I think across all the various themes that people talk about in the industry, sustainability is really the one that is getting everyone's attention right now. There's no bigger theme out there. James, I just wanted to come to you first of all. When you're discussing this with your colleagues and with your clients, how do you identify whether an investment is sustainable or not? And how do you kind of begin to talk about such a vast theme and how you might offer your clients exposure to it?
Yeah, I think ultimately it's a way of thinking about investments. And I think right now we want to invest in companies that are sustainable over the long run. And of course, it requires new matrices, a new lens of evaluating companies. While in the past we used profit and efficiency matrices to look at companies. But I think increasingly we are using ESG factors, whether it's environmental, social, or governance factors, to provide a sort of an overlay to select companies that we think scores highly on these matrices and actually, in fact, would perhaps be more sustainable in the long run and more adaptable in the way they operate. And I think that's going to be a very important shift in mindset, and it's really occurring right now in the investment industry. But also importantly, how we look at investment teams is more than just going beyond using ESG factors to evaluate companies, but also to find out sustainable teams that could actually be profitable over the long run. So we know that this year is really a pivotal year for sustainability, especially many countries and corporations have pledged ambitious targets to go on net zero. And I think that also creates a huge amount of structural opportunities in investments, whether it's in energy transition, whether it's in clean energy, or even in the electrification of transportation system, or even in the urbanization solutions that are actually much more energy efficient. And these teams are actually getting a lot of interest and, of course, providing a lot of very interesting perspective for investors in the years ahead.
I just wanted to come to you, Adeline, on the issue of clients and what your clients talk about when they talk to you about the topic of sustainability.
I think it ranges, Thomas. We have a group of clients that are discussing the topic, as you mentioned. It's very hot and trying to understand what it means to them. And that conversation sometimes can be never ending. Then you have clients that have already spent some time thinking of it. And particularly if they are corporate related, there are very specific top-down targets they have, as you mentioned, around net zero. And so the direction would be around contributing to that net zero target through their investment philosophy. Then there's a final group of clients that you could say are a bit more sophisticated, having looked at this for a long, long time. And we have lots of clients like that, especially in Australia, where despite not being one of the most carbon friendly in terms of output, the investors there have a lot of serious frameworks and policies that they look at, and some of them are actually investing alongside specific SDG goals and continue to add more and more to their sustainability research or resources and governance in order to increase their engagement. So it's a very broad range about what our clients are thinking about, Thomas.
Morgan, Could I ask you how ETFs in particular fit into the overall way in which investors build up their exposure to the theme of sustainability, and also how that strategy might extend beyond ETFs?
Sure. So when just to put some perspective with what Adeline and James have already been said, like from an industry standpoint and the ETF industry, we have been seeing two dominant trends over the past year or so, 18 months to be honest. First of all, is the rise of thematic investing. It has been remarkable. It has expanded threefold over the last 3 years. And this comes from retail and institutional investor support. And the second trend is the rise of passive sustainable funds. These funds, the total assets within these funds have more than doubled over the past 3 years and now reaching about 300 billion of US dollars globally. So these two trends are definitely global, even though the sustainable approach is and sustainability investing is potentially already well established in Europe. That has about 75% of the assets under sustainable funds. But two takeaways from what Adeline and James have been saying is, first, there are many drivers for more adoption of sustainable investing and thematic investing. Just want to make sure here, one thing, sustainable funds are not all systematic investing and vice versa. So thematic investing is described as a long-term forward-looking investment approach that tries to capture structural trends in the economy and society, whereas sustainable investing is really capturing the ESG framework when making investments. So they can be an overlap, but not always the case.
Well, that's great point, Morgan. I totally agree with you there. I thought you just paused and I thought I'd jump in because I also see how clients are thinking about the sustainability, where they're actually seeking full integration of the E, S, and G, because these are still pillars that they understand. And there's sometimes long conversations about, do they have more weight on the E when they choose a product, or do they have more weight on the S, which is so hard to measure, or the G, which there's been quite long-standing analysis on how good governance does lead to good corporate returns. So I just want to chime in there, Morgan, about your views.
No, thank you. And also, so the overlap between sustainable investing and thematic investing can be seen sometimes when you target sustainably themed ETF, for example, that targets innovative and disruptive industries that could lead to a tangible improvement in the society, in the environment. And as the industries grow, they will not only affect positively some areas and make like positive improvements for people or planet, but they also have high growth prospects, and this is where the overlap is. But then so the sustainable investing and thematic investing can be complementary, and they both share the same investment horizon, which is the long-term investment horizon. But again, to really insist on the differences, the companies that are pursuing sustainable practices are not necessarily the same that are deriving a large portion of their revenues from services and products that are related to sustainable themes such as clean energy, renewable energies, health, and other sustainably themed sustainable themes.
Yeah, that makes a lot of sense. I think that's the key distinction. I mean, you might have a company, say a bank, that has very high ESG scores because of reforms it's implemented over the last 3 years, but it's a 200-year-old company that is very large and mature and isn't a growth stock. So I guess that would be an example of something that's might be in the basket of sustainable goods, but not in a thematic sustainable investing basket. Is that the kind of distinction you're drawing?
Well, the first distinction is, as a leader in the thematic space, we always start with a conviction. So what we look at is more of the theme, and we try to define the scope of a theme that can be across three categories: disruptive technologies, people, demographic, and climate change and physical environment. So the first thing is to look at one particular theme, and then is to look at the investability of this theme and guarantee a purity of the theme. So we're more focusing on the theme itself at the beginning, and then we use a revenue threshold to make sure that we have a pure exposure to that theme. Some approaches include an ESG screening, and they are deemed sustainable, and some don't. So there are many different approaches, and investors can pick and choose which one are the best for them.
James, just to come back to you, when it comes to these specific overlaps between the thematic investing and sustainable investing spaces which we're discussing here, what kind of risks arise?
Yeah, well, I think there are always risks. Of course, one of the risks is greenwashing. So you do not want to be invested in companies that are actually not what they are supposed to do, and I think that's going to be an issue. But of course, that's a problem, a teething issue, I think, with all initiatives. But also, I think another issue, I think, over the longer term, which is also the lack of consistency and harmonization of ESG accounting and standards across the world. I think that these are issues that have to be solved as we go ahead. And of course, measuring each of them, it's very difficult in some ways. And of course, different countries, different companies have different ways of measuring it. So I think these are the issues and the hurdles and the challenges to sustainable investing. But ultimately, I think what's good is that we investors are recognizing the issue, and they are starting to invest in sustainable investments in a big way. And that increase in capital would push at least all these issues and would sort of solve these issues over the long run. And I think that's the challenges and risks that the sustainable investment industry is actually facing right now.
And to James Bond, if I can jump in, there absolutely there's still confusion around what is an ESG fund, a sustainable fund, and Europe has been leading the way to prevent greenwashing with a series of EU regulations under the EU Action Plan on Sustainable Finance, and part of it is like how you regulate UCITS funds, and the new SFDR regulation in Europe is really tackling this greenwashing approach by setting like disclosures requirements for sustainable funds. So it's potentially one way that will one example that could be potentially generalized and globalized at some point within the global sustainable investment community.
Just on that point, given the distinction you were drawing earlier between sustainable funds and thematic investing portfolios or exposures, would those checks not pertain more to the former rather than how would they relate to thematic investing?
Well, it's not. This regulation applies to all strategies, including thematic. So that is something. Sustainable investing is something that is seen in various types of strategy, but not just thematic investing, so it's applicable across the board. So I don't think there will be any distinction. But for thematic investing, I mean, it's something that transcends the sustainable investing. It's just a strategy that is most of the time equity based, and that is focusing on long-term structural trends. And as I mentioned before, some of them can be sustainable with an ESG screening, and some are not. But it's just a different different strategy And just to be clear here, sustainable investing, ESG investing is not a theme per se. It's not thematic investing. It's another layer you can have on top of thematic investing.
Exactly. So I thought the regulations you were referring to relate to funds marketed specifically as sustainable funds, right? Whereas the point you're making is that thematic investing is not quite the same as sustainable fund. Obviously, it's a different thing. So if you have a thematic investing portfolio that gives investors exposure to the theme of sustainability, is it necessarily marketed as a sustainable product and regulated in the same way by the regulations you described, or does the fact that it's different, as you've pointed out, mean that it's regulated slightly differently?
They're all under the same regulation. Now you're making a very important point here, Thomas. It's like how differentiate are all these products. So all the thematic investing, even though they're targeting the same theme, have very differentiated approach. So it's very important for investors to look beyond the name and beyond the theme that are targeted by these ETFs, for example, a thematic ETF, and look at the constituents. And therefore, there will be many different approaches, many different methodology behind each index that is tracked by these passive investments. And therefore, you can pick and choose the one that is the most suitable for your investors' risk profile and objectives. And some of them are sustainable funds and will have different disclosure to make within the SFDR regulation in Europe. And some are not deemed sustainable and have like less disclosure. So the level of disclosures you make depend on how green is your investment strategy, and that depends across all funds. There is no one size fits all.
Adeline, could I just come to you on that topic? This general topic of the overlap of sustainability and thematic investing. Where do you see the kind of Venn diagram on that?
I think I would actually concur that there's a tendency to lump it all together, because thinking back as an investment consultant, we also talk about things like the emerging market wealth theme. And then we talked about the digital theme, right? And I've even done panels like this where it's very focused around digital innovation, disruption, creating an investment theme or innovation theme. There are even ETFs themselves that have the word innovation in the name as a way of promoting. So I don't see sustainability being necessarily tied to the mindset of thematic, as in is something that will ride the wave. Then after a certain cycle, people will turn away and look at other things, or there'll be a new topic in town, because for Mercer, especially a sustainable investor really ties in with our clients who are largely long-term. And now there's a promotion of the idea that you're a universal asset owner. So your capital makes more of an impact where it's properly deployed. So for clients that may think about embracing sustainability in a big way, that's where they may actually be actively looking for products that actually tie in with where they want to focus on. And I've got sophisticated clients that have specific SDG goals, SDGs that they have, and that will actually drive bulk of their investment philosophy. Then I have clients who think that, well, let's not be on the wrong end of this whole transformation in the world. So let's dispose of things that are a bit gray. So things that can be stranded assets, as we say. And then they move away from that and then try to balance that middle ground of, while everybody's working out what means what and how corporates are going to respond to different disclosures, how asset managers are going to change and adapt, what's the cost, thinking about all these kind of disclosures and assessment, and then determine their direction. So I think as a roundup, thematic just mean a lot of different themes that we may play to. You know, we also had financial services theme before GFC, where buying a bank and focusing on financial services seems super safe. We also have the consumer theme as we think about the rise of markets, especially in Asia, where consumerism was just a big driver of returns. So if we look in the world of sustainability ideas, there are some interesting things that are coming out. There are things that are very driven on the digital innovation that transforms. There are also construction related ideas that's where it's trying to make an impact on better health and safety guidance. And then there are some where it's focusing on certain communities that may not have the same access to water, food, telecommunications. And then there's capital being allocated to that, and the returns on that can be attractive. So I think it's a wide range, and I think sustainability ideas, investing rather, is here to stay. And certainly for us at Mercer, we hope to see it being mainstream and be very much integrated in all investment decisions.
And maybe one thing to add to Adeline's point, I absolutely agree with her. Many investors use the United Nations Sustainable Development Goals to assess the sustainability of a theme. But one thing that is important to note is that initially these Sustainable Development Goals weren't made for the investment community. So the direct investability of these goals is very difficult, but it's just such well-articulated framework that it's really helping and guiding investments toward a sustainable space. But if we have to summarize what they are about, I think there are three important pillars. It's investing in the planet. So all the clean technology, climate change related themes are, of course, preferred by investors when trying to gain more exposure to such an area of investing into planet. The second pillar is investing into people, and investors tend to go for health themes, health innovations, well-being, education as examples of themes to gain exposure to these pillars. And the last pillar is around investing in prosperity. And as Adeline mentioned, it's also the rise of the digitization of the economy and how you incorporate digital tools and disruptive technologies to increase prosperity. So people are investing in infrastructure development that includes smart cities and also like clean water. So better, sustainable and cleaner infrastructure for society. So that's just something I just wanted to emphasize here, because it's a framework that we are seeing European investors also using.
Got it. So those are the three main themes you see in relation to sustainability.
I'm just saying that many investors use them to guide their investment in the thematic space. But again, there is a clear distinction on the theme and a sustainable approach. A theme can be sustainable or not, and vice versa. A sustainable investment can be a thematic or not.
Right. But the things you just, so our audience is clear, the three things you give are examples of three themes, sustainable themes.
There are three categories. And each of them has
categories in the United Nations.
Yeah, exactly.
Sorry to jump in there.
Oh, okay.
She's just breaking it down for us.
Yeah. Sorry, go ahead, Morgan.
No, I was just wanted to make this point clear that this is a very used framework by the investment community.
Okay. But just sorry to dwell on this, just for my understanding as much as the audience is, would it be plausible to use one of those categories as a theme? I mean, presumably, just because it's a category in the UN, it can also be used as a theme by an investor, right?
I would say that it depends on how you approach thematic, but at Global X, we approach themes as very targeted structural trends. So we are more focusing on the trends itself, so the disruptive trend, rather than trying to fit any framework. So we always start with conviction, as I mentioned. So we monitor multiple themes and see how, and just evaluate how disruptive they could be for the global economy and society. And then once we have this conviction, we as a passive solution provider, we are evaluating how passively you can approach have a broad exposure to that market, to that trend. And then we want these trends to be relevant for the next 5 to 10 years. So time frame is also very important when you invest in thematic investing. in thematic. So again, I mean, our approach is never to fit any framework. It's really to focus on the trends. And it happens to be that over the last 2 years, two major trends are the digitization of the economy, and that is so all the disruptive themes that you can see, like the adoption of cloud computing, cybersecurity, but also big data, robotics and AI, these themes. But the second massive trend we're seeing globally is definitely a transition to a green economy, and investors want also to transition to more sustainable investments and sustainable portfolios. And this is where thematic investing is one of the approaches available for investors to achieve more sustainable funds. Because when you think about sustainable funds, you can do ESG integration, you can do exclusion, and you can do thematic. But again, not all thematic funds are sustainable.
James, to come to you, how would you deal with a thematic investing approach? How would you deal with assessing the sustainability credentials of a thematic investing approach that isn't explicitly to do with the environment or to do with sustainability? For example, someone might be interested in a theme of digitization and digital money and digital currencies, and there's a lot of debate around the environmental consequences of Bitcoin mining. Are there situations where certain disruptive and growth-orientated themes have negative environmental or sustainability characteristics, and how do you deal with that if so?
Yeah, well, thanks for that question. I think how I would frame it and how the investors usually with us deal with it is through a framework of how we think about investments through a core portfolio and a satellite approach. So at the core portfolio, it's where the investors' portfolio are mainly invested in. And I think in the core portfolio, what we are trying to do is to have an ESG overlay in terms of how you select stocks, because we think that over the long run, companies that do well on these matrices can actually be more resilient over the long term. And that's where the core portfolio is. But at the satellite portfolio, it's where the thematics are. And that's where all the structural long-term trends that we're trying to look out for. Some of the themes that we talk about, whether it's that whole digital revolution that we are looking at, that is a theme. The sustainability or green revolution that we talked about, that is also a theme in which energy transition, for example, smart cities, for example, electrification of the transportation system. So these are the thematics that we want to capture and help investors invest in over the long term. So I think in that sense, that's how we have various thematics. And ultimately, it is to the investor themselves to determine to which spectrum or how much they want to integrate all these into their investments. And I think that's very important. For some, it's negative screening. For some, it's ESG integration. And for some, it's really a combination of all these integration of ESG into their investments and also into some of these long-term thematics that are aligned with some of the ESG or United Nations SDG goals. So it really depends on investors, and of course, it depends on their preference and how much they want to invest in these lines.
Thank you very much, James. Adeline, I just given your parent company is a US company, and you're based here in Hong Kong. I think you work closely with a lot of European markets as well. How much is this a global phenomenon? The overlap between thematic and sustainable investing, and how does it differ in different regions?
Well, Thomas, in terms of different markets and different regions, the attention in Asia typically is about measurement. So when something cannot be easily measured and explained, you don't tend to be able to get money to be allocated to it. While we have spoken to our counterparts in the US and Europe, and also, of course, in Australia, where there is almost a baseline for any fund managers to actually have ESG integration mindset. They have to have resources to go into this analysis. They need to have a ready answer for how they are actually contributing to the fight against climate change. So I think I'll start with measurements and the standards that I tend to have to handle with my clients. But the fact that the Hong Kong MA and of course the GBA initiatives all around thinking about how we can make this a really push for green bonds or green buildings and so on. I think that the awareness that let's not try to hammer out what number needs to be the highest and trying to optimize every single aspect of returns, risk, fees, and ESG level or SDG alignment and so on. But just to start getting on it and do something. And in fact, our last 2 weeks has been quite busy with just pension schemes inquiring, are we an ESG friendly pension plan? Well, it's a very, very broad question. What do you think you want to achieve? And then endowments themselves are also looking, while they are a not-for-profit entity, are they investing in such a way that they are also making sure that their capital is making an impact alongside their vision. So we do see that change in mindset and actually the desire to do something, to put some money on this whole challenge and sustainability as a mindset. Thank you.
Thanks, Adeline. Morgan, I was going to come to you on this, please.
Just to mention this survey done by HSBC on sustainable financing and investing that has been published like 2 weeks ago, it was very interesting to see that the majority of Asian investors, actually 63%, are interested in sustainable energy projects, but only less than 20% are already invested in that area. So it's definitely an indication that thematic investing and the overlap between thematic and sustainable investing is growing in Asia. And among the themes that are on top of mind of Asian investors, according to this survey, was solar panel, water and water waste infrastructure, wind power, smart cities and grids, and also electrical vehicles. So we're seeing that these trends and these themes are also very easy to link also to what's happening in China. As one of the main country that is now pledging for a carbon neutral economy by 2050, because one of the pillar of the 14th five-year plan is ecological transition, and all these themes are very linked to the application of these plans. So we definitely see a trend that is global, and across all continents, you can see governments taking actions to make infrastructure more sustainable, and these themes are contributing to it.
James, just to come back to you on this question of the global nature of this phenomenon. Does a kind of thematic approach based around sustainability encourage asset flows into particular regions more than others? I mean, I'm thinking in particular of China, but also India, a lot of Asian economies, a lot of emerging market economies that are transitioning from heavy industry to more sustainable practices. If this trend gathers pace, should we expect it to encourage more flows into those regions, and what impact will it have on flows into other parts of the world?
Yeah, I think in many ways, and in many parts of Asia, they are starting or at the beginning of making this transition. And usually when this shift occurs coming from a low base, you do get huge amounts of change, you get huge amounts of even investments, and you get a lot of positive impact that comes out of it. And I think it's very clear. Just take, for example, in China's case, while China is at a crossroad, it's the largest emitter of carbon, but also at the same time, the largest producer of renewable energy. And as China makes that shift, it would change in a big way, in a profound way. as it transits towards this green economy. So it would set up huge amounts of investments, whether it's for renewable energy, whether it's for electric vehicles, the infrastructure associated with it, and whether it's also for how the urban landscape would be in terms of efficiency of energy use. So I think these transitions are huge, especially for an economy that's coming and making ambitious targets to make that shift. Similarly, I think in many parts of Asia as well, many parts of Asia are still very much reliant on fossil fuel, whether it's coal, energy, etc. So if countries start to make that shift, it could be much more expensive or painful at the start. But as they make these transitions, the investments associated with it will create a lot of opportunities for investors in the years ahead. And the benefits that they will reap from it extends for much longer time, whether it's through the improvements in air quality, whether it's improvements in the quality of life for people, or even in biodiversity. That is a very important facet, especially for Southeast Asia. So I think these are, the direction is clear. It's moving towards a green transition. And I think Asia has a lot of scope for improvement. And that scope for improvement presents a very big investment opportunity for investors in the years ahead.
Thanks, James. There was a point you made a few minutes ago, Adeline, about measurement and the attractiveness of measurement for clients in Asia in particular. And this topic of sustainability, as we know, extends beyond the environment to all kinds of social phenomena. How do you, in your kind of professional capacity, go about measuring or quantifying some of the more difficult aspects of that spectrum?
Yeah, Thomas. The social aspect drives thinking of poverty, gender equality, and also diversity. So and many more. But these are the three areas that we have seen clients becoming more particular, because you can measure improvements in unemployment. I mean, unemployment rates going down, and then poverty levels are actually being lifted. That is actually a metric. The diversity and inclusion one is an interesting challenge because your interpretation of diversity will vary depending on where you are based. But as a baseline for many of the fund managers that we evaluate and research, we challenge how their own organization is showing diversity in their business, because fund management, stock picking is also quite a people business, even though you may rely on some models and systems to tell you which one looks like a good stock to buy. But are you actually fostering an environment where you have the best ideas from the best people, regardless of race, gender, and sexual inclination? So the D&I aspect is one that we feel that from the top down, from corporations that have the funds to do so and be able to invest in the way they recruit and the way they train and the way they promote is going to be particularly important. Then other aspects that we have talked to our clients around the S part, they tend to then turn towards more private investments. Now, then there's actually an index that they will derive in-house to actually measure the amount of impact they're making for that community. And especially in Southeast Asia, we do see a lot of tendency towards poverty and helping girls get to school. Still a problem very much in certain communities. So that's quite an easy metric, because it's going to be how many households in that community and the number of female babies, and then how those female babies then continue to be supported until they come to at least completing primary school. So then that's where private investments, they find, tend to help them, because you can directly influence how these assets are being allocated. But there is still a return, because it's still an investment in the community in how they set standards for schooling and education, influencing certain policies and so on, putting money on it. It's very highly involved. I would say there's an extreme end versus ETFs that makes it investing so possible for everyone. But that still gives a metric to show that there is opportunity in this. In the S part, it's just there's a lot more that you think about and you have to dig deeper.
Thank you very much, Adeline. Morgan, I just wanted to come to you on the ways in which this theme or the various themes involved here are evolving. And I'm thinking in particular of the overlap between thematic investing and sustainability. So those particular thematic strategies that have an explicit sustainable quality to them. How are they evolving, and how rapidly are things changing, and how are passive vehicles able to keep abreast of that change?
So as we already mentioned with the other panelists, I think there are very key drivers for the adoption of climate change themes, for example. Not only we're seeing change of behaviors from consumers, but also corporations. If you take Google, Facebook, Microsoft, they all made commitments to become carbon neutral by 2030. So this is a clear change of scenery, and is providing a strong tailwind to the adoption of these themes. But on top of it, now you have governments across the globe that have pledged carbon neutrality, that there is the Paris climate agreement that is also providing a strong tailwind to the theme. And then there will be at some point some like fusion between themes and themes that are actually mutually dependent. When you think about clean technology, it's also very linked to some of the disruptive technologies we're seeing in a completely different category from climate change. It's more due to like disruptive technologies itself. So because if you take, for example, the rise of electrical vehicles, it's really dependent on technologies around lithium battery, for example. So there will be some of themes that will be increasingly linked in the future. But overall, we're seeing a very rapid adoption of these themes. And I think also the pandemic we've been through for the past 18 months has also been an accelerant for all these themes. When you think about more disruptive technologies, the adoption of cloud computing has been exponential. Same with like online retail sales, like e-commerce. So all these themes have seen a tremendous growth in terms of adoption, and their adoption curve has steepened. Now, when you look forward, I think what's most important is to have a consistent approach to thematic investing. And this is what we're trying to target with passive investment. We are very different in terms of approach from an active manager, because when we approach thematic investing, we want to provide a broad exposure to the trend. So we're not trying to bet on who's going to win or lose within the transition in terms of which company we will include in our basket of companies to gain exposure to a theme. We want a broad exposure to that theme. And I think it's very important when you have in mind a long-term investment horizon. You want these investment strategy to remain relevant for the next 5 to 10 years.
We've got time for a few questions from the audience before we conclude. The first of which is a question about the energy crunch currently ongoing around the world. So the question is, would the recent energy crunch cause a reversal on the move towards sustainability? What does it mean for the sustainability shift? If anyone wants to jump in on that.
Well, I'll take it. I think that the whole energy crunch that we're seeing right now, it's something that's short-term. The rise in price, whether it's oil price or coal price, it's a short-term aberration. The sustainability and the green transition, it's a long-term theme that is going to happen, and it's not going to be impeded by short-term movements in prices such as fossil fuel. So I think in the long run, what we're going to see is that the convictions and the commitments of governments and of corporations to go carbon neutral would in fact accelerate the shift towards cleaner energy, that green transition. And I think that trend of a green transition would actually carry on despite this short aberration, and if anything would actually increase the incentive to accelerate the transition to renewable energy because of the higher prices of fossil fuel. So I think that the trend is still very much intact. The structural forces associated with the green revolution is still very much intact. And of course, all eyes will be on COP26. And I think the commitments would become stronger in all companies and countries in making this whole green transition.
I would agree with James on that, that where one is short-term and one is that long-term targets. Maybe the general question is, if the energy crunch was to continue, then would we see delays or for countries and corporates themselves to actually reach their targeted net zero deadline? But as we know, targets are there to drive behavior and policy. And I think we will continue on that journey, even if we're 1 year late or 2 years early. The fact of the matter is still the direction of travel will not change.
Great.
Absolutely. I agree with what's been said, because I think a clear distinction between thematic investing and the rest of strategies is that this is a structural long-term investment. So cyclical swings is not impacting the overall relevance of the strategy on the long run.
Is there, just to play devil's advocate before we move on to the last question, is there not an argument that the rise in fuel prices has long-term aspects to it? I mean, if you look at the case of coal in China, the government's implemented reforms that have reduced production dramatically, and that's accelerated the rise in the coal price. Those reforms, as you say, are long-term, part of a long-term plan for a 2050 energy transition in China. So you would expect concurrently, perhaps, the coal price impact to be long-term as well, rather than cyclical.
Well, Thomas, if your question is that will the energy crunch and latest reforms towards sustainability targets being achieved create short-term opportunities for people to make some profit on the side, I think the answer will still be yes. If you take some directions on fuel and you bought oil at 75 a barrel and they actually jumps up to 200 because of all the crunches and all economies coming back online from the recession, and consumption shoots up, yes, there'll always be money to be made on side to be on the other side of the equation. Instead of green, I'm going to be brown or black or gray. That will still happen as we go through that transformational aspect in our behavior and how we run our lives, actually. The then falls to the governments that as they control this, there'll be other costs that come in, and that's where taxonomy is very important impact as well. And I know that Europe's going to be leading that way. And we discussed, whether it be brown tax and black tax. So in one way that you can see maybe things like coal prices going up, it goes getting more and more expensive, more and more costly to dig things out of the ground and burn it. And then the sway of also the mindset and consumers is towards energy that can be recycled and reused. All that is playing into really the mindset of a long-term investor, where you want to deploy capital in companies that will continue to be around in the next 20, 50, 100 years.
Great. We're very low on time. So just a final question here. So I'll just read the question out. How do you measure your investment's additionality to sustainability? And how do you define sustainability? I think we've touched on this a little bit, but it might be a good opportunity to revisit some of the points that have arisen on the panel.
Well, quick one for Mercer, because we're in a fortunate position where we get to see all sorts of managers and evaluate their capabilities. We actually measure how the performances of ESG 1 and 2 rated managers fare relative to ESG 3 and 4. Subject to all these managers are also highly rated on their investment capabilities and operational risk levels. And we continue to monitor that because we've introduced our ESG ratings around 2014, I think, if not a bit earlier. So we're building up that track record and keeping that measured. Do we see some differences in deviation? We do, but not at the moment can I say statistically significant to actually say that, yes, it adds point whatever to alpha, but there's certainly, we observe a difference.
Great, thank you so much. James, quick 30-second answer on this?
Well, I think at this stage, what we see is that there is no sacrifice of returns when companies that adapt ESG factors. In fact, there is a greater resilience. But ultimately, I think it is that long-term view, whether companies can adapt to the long-term trends as the economy transitions. And of course, we think that companies that rank highly on ESG factors can adapt better in a brave new world of this transition.
Thank you so much, James. Thank you. And Morgan, just we've got 45 seconds left. Have you got any thoughts on this? How you define sustainability?
Well, sustainability is typically the use of ESG for investment that integrate like material, environmental, social, or governance factors in the pursuit of greater financial returns. And that's something that transcends thematic investing. But I think if we have to sum up, I think there are still like sustainably oriented themes that are SDG aligned, that can contribute to get a positive change. But investors have to look beyond the names and look at the constituents and the methodology to really assess the sustainability of each theme. But some of the themes, such as the one linked to the climate change, are really participating to the effort to transition to a greener economy, and then therefore are totally relevant for transitioning portfolios to more to green.